for the options auto trader updates, and then we'll dive into the market. So again, the options auto trader, first off, disclaimer, everything I'll be talking about on this training here is purely for educational reasons. I'm not a registered broker dealer, financial advisor, or anything like that. So I'm talking about all the new updates here real fast, and then from there, we'll get into other training and stuff. So first off, new strategies added. Again, this is an option selling auto trader. So again, wanted to add all the option selling strategies. So that includes strangles. We already have strangles, but straddles and iron flies. So straddles is not a really high win rate. This is more used for 0 DTE, but also has a lower win rate. So be very careful with straddles. They're basically just a triangle shape in the middle of the profit graph. And so again, you have a very small area of profit, but because our win rate is low on that, around the 30 to 40% range, it does mean that we make more when we profit, because in the options world, our win rate is associative or associated with a reflective profit and loss ratio. The iron fly is the same strategy, a triangle, but instead of with uncapped losses to the downside, it kind of flattens and does an iron condor type of defined risk. And then now, because I know there's a couple traders here who do 113s and 114s, which is very brave of you guys. But again, you can now do that. So instead of doing a 112, you can set up a 113 or a 114 or something like that. So that's now in there. We also have new management styles. There's something I'm excited for. I've been looking for back testing software to kind of like actually give data around this, but I haven't been able to quite yet. But you can now in the software set up either, this is already what's in there, is doing a take profit and stop loss based on percentage. So for instance, close a trade once you're at an 80% profit, or close a trade at a loss once you've hit the 200% stop loss or something like that. So we currently have that in there, but now you also have take profit amounts. If you're like, once I hit a $500 profit, I want to close the trade, you can now set that up. If you're someone who does a stop loss amount, like I want to lose no more than $1,000, you put in $1,000 and the trade will be closed once that amount has been hit. Again, your highest win rate will be the percentages, just because that can adjust to the credit that you received. And then also, because I know a few of you guys were asking, and I think it is a really fun tool for those who understand it, is trailing stop losses are now supported. What does this mean? Well, I'll explain this a bit more when we get into the charting and training portion of this meeting. But again, it basically means that you can follow a trade up, and so that if it immediately turns around on you, you can lock in profit instead of it rolling into a loss. And so we'll talk about that later too. Next, as most of you guys know, because you're from Discord, we do have the weekly Discord updates, which show you how the options auto trader is doing, as well as the metrics around each strategy, which is very cool. I also shared my alerts. So again, anytime my auto trader takes a trade, you'll be able to see this in the Discord. And so for Nadia, who's asking about the recording, if the recording is good, yes, I will share it. But again, we'll be going over the updates here, almost done with that, and then we'll get into training, which you want to be here for. But all right, let's dive in. So supported trading assets, again, most of the same stuff on futures, indexes, ETFs, a few more have been added. And then for those who like stock options, which again, not a fan of, but you can do Meta, Apple, Amazon, Netflix, Google, Tesla, Palantir, and AMD. Again, the reason why these were selected is because they're the most liquid and stocks that have the smallest bid to ask spread. Again, I'm only going to bring in assets that you can actively trade and have a good win rate on. I'm not going to bring in ones that are going to be bad for you. So that's why that's the current limit here. And honestly, most of you guys will be perfectly fine, like I am, with just ES and MES. So that's where our focus should be. All right. Next, we have the Share Auto Traders feature, which most of you guys hopefully know by now. But again, when you're in your Auto Trader page, you can click the Share button, and then you can share your Auto Trader with either people who have a current account or don't. Also, the starter plan got moved up to allowing 3 Auto Traders for those who are interested in testing out the Auto Trader. And coming soon is a Simpler Trader partnership. The contract was just signed, which means that Lorna, as you know her, who's been trading for a while, who has a lot of experience specifically in the zero DTE world, will be teaching trainings on how to do that through Simpler Trading. And so that's coming very soon. And Trade Your Broker in integration should hit within the next 2 weeks, so by the end of July. So super excited for that. And so yeah, that's kind of all the things for people who just now tuned in. Again, we have new strategies, we have new management, we have Discord updates, new trading assets, sharing features, and then kind of some updating things. Again, this is outdated, but so we're going to get into the Q&A time, and I'm going to lead this. Don says you've been busy. Yes, Don, I've been very busy. I was traveling all last week, but I was still spending most of the day coding. Anyways, we're going to get into the Q&A session. So put your questions in the chat box, and then again, I'll be able to invite you on to unmute yourselves, and we can do stuff like that. So again, I see a question from Vera, which I will get to in just a second. But the first thing I wanted to do is kind of deep dive the market right now. Where is the market going, and how can we kind of protect ourselves from what is going on? So again, I'm going to pull up a chart of ES here, because this is what most of us are watching. And so I'm going to track this here. All right. So again, Vera, I will get to your question real fast, but I mean in a second. But if we're starting out here, so this is ES, or the S&P 500 futures. This is what most of us are trading. So if we look at this, a normal healthy uptrend is defined as higher highs and higher lows. And so if we look at this, we have a low here. Then we have a higher high, then a higher low, a higher high, a higher low, a higher high, a higher low, a higher high, and now we need a higher low. So right now we're following the pattern of a very healthy uptrend, which means that this is normal. The only thing we want to watch for is this level right here, because this right now is currently our previous low. And so we have a low here at the 5,500 level. And that's also coincided where this trend line is. So we have a very strong level at 5,500. So I expect to see a slowdown around this level, where the market starts slowing down and headed back up to the upside. And so again, that's just what I'm watching from my side. Again, if we start to crash through it, that will be something to watch out as well. But most of you guys are trading 112s, which by default give us a lot of protection in this type of scenario. So let's dive into different things. First off, let's say you entered at the very top of this market. And then again, if we're trading a 112, that typically gives us 10 to 15% of downside movement. So 15% of downside movement would be all the way here down to 4,800. So what I mean by that is, well, if I draw a line of 4,800 right here, this means that ideally the market can drop within this range, and this is our 3x zone, okay? As long as the market continues slowly dropping like it is right now, our position should be fine, and we'll slowly be like this, and we'll go into this zone, something like this, something like this. This is all not going to trigger a stop loss, because as time goes on, you'll make money from decay, and then it'll offset your losses. So a slow move like this down into this range would result in a 3x profit if you're trading a 112. So from this perspective, there's nothing to really be scared of, except for when we get to this zone, where if it was to break this and then do a flash crash down, again, your stop losses would be triggered, so it would protect you. And then hopefully you have rolled your profitable 112s into hedges. Now, the question is, Austin, what if I just now put on a 112? What hedges should I put on to protect this downside movement? You have two options. Well, I mean, you have a lot of options, but two of my favorite are going to be a ratio hedge. And so you can do a ratio hedge simply by buying the 25 delta. So you'll buy a 25 delta put. So I'll just put BTO, if you can read my handwriting, BTO. And then what you'll do is you'll sell, so 2x at the, again, you can pick whatever range you want, but a 7 delta mark, and you can sell to open that. And this will create a large ratio spread that will look like something like this on the chart. It will put you out like this, meaning that you'll have protection all the way down here. And depending on if you do it on ES or MES, it will give you between 2 $1,000 to $20,000 of downside protection. However, it is capped down to this zone. Once it hits this zone, then your protection is now over. So that's one option. Another option is to simply do a put debit spread, which is something we're familiar with as 112 traders, which is where we just structure the trade like this. So as the market drops, we just have a straight line profit. And so again, that's something that you can do also. If you're just wanting to have a lot of protection and you're nervous, well, again, it's fine. You can just go out there and buy a cheap put, and you can always have that protection as well. Regardless, if you're just now entering trades for the first time, now is the perfect opportunity to do it, because you're going to collect credit in the $40 range for a 112, which is going to be perfect. It will also extend out your downside further. So overall, as a 112 trader, you're doing great. Now, if you're trading strangles, where you're capping your downside and upside, something you might want to watch is just watch how it's doing. If it doesn't slow down at this range, you could consider closing early, or just let the stats with the stop loss and the take profit play out for themselves. If you're doing a directional trade, like a credit spread trade or something like that, be aware that you probably hit your stop loss, or if you haven't, then you probably will hit it soon. Make sure that you're only trading directional trades with a signal or with an indication or an indicator to know the trend of the market. Anyways, 112 traders should be fine. Now, that's kind of what I have for the market breakdown and what we're looking at. Again, if you have any more questions about the type of hedges you should put on for your account or how many, feel free to ask. But I believe I cover those in other videos. I don't mind covering them again. But if you have a question, please let me know, and we can put that in the Q&A channel. Now, Vera was asking, can you elaborate on what happened on Tuesday and why the positions were closed prematurely? Yes, Vera, absolutely. So what was happening was I was trying to add two different assets. I was trying to add, oops, I can't change it. Oh, that's how you change interval. Did not know that. Didn't realize there was a hotkey for that. But if I go here, 6A, I can do this. Australian dollar futures and European futures. So if we look at that, 6E. Euro futures were two assets that I was trying to add. You can see there that in general, I mean outside of this right here, but that was a downside movement, which you could have made some money from 112s. But in general, recently these stocks are very these futures are very liquid, and they have been very profitable with strangles and 112s. So it's trying to add these as options to be able to trade. But the problem is, if you can see, these things trade at a very large decimal count. And so currently in the software, because we've been doing large things like ES, we only care about 2 decimal points. So again, 0.75. So again, we only have 2 decimal points. But for this other thing, I had to add 3 more to have 5 decimal points available for those futures. And all these decimal points, when you were doing the math with them, they had rounding errors that caused a couple trades that were close to the profit range to take profit. And so on the 16th, what happened was trades that were close to their profit target were miscategorized and put as that they had a slightly higher profit than they did. And because of that, a few trades closed early, turning into hedges and stuff like that. That was caught immediately, and I put protections around that, aka removing those 5 decimal points, and so that won't happen again. But because you asked what happened, that is what happened. I put checks in place to ensure that does not happen again, but that is what happened. All right, any other questions about the options auto trader, the market, hedges, things like that? Feel free to put your questions in the chat box, or because this is a meeting, feel free to unmute yourself and we can just talk from there. Don says, can you review the profit curve again? Yeah, for sure. So let me pull up my Tasty Trade, because if you do it from the website should hopefully get better. Not my website, but the Tasty Trade website, I hope gets better, but it doesn't show the curve well on the website. I actually have a video coming out. Is it today? Was it today? I think it might be today. Let me log into Tasty Trade though, so we can check this out. Any other questions while I pull this up, just so we can have them in the queue for later? Yeah, let me check just real fast while Tasty Trade boots up. Go to channel. Yeah, right here. So this video just came out 16 minutes ago. If you want a refresher on what we talk about today, I go step by step on how to read and understand the P&L curve. Yeah, you can check that out there. Anyways, let me change my screen share. So many, okay. Stop share and share screen to Tasty Trade. All right, here we go. All right, so like mentioned before, guys, I'm in the same boat as you guys. You can see here my losses on these positions. Thankfully, like I teach, I have a lot of hedges on my positions, which has slowed my losses, and it's very great for me. And I hope you guys have done that too. If not, you guys can put on hedges now. But I mean, I was at the $24,000 year to date performance, but now I'm down about 4,000 or 5,000. You can see about right there. So again, you can't survive all markets, but also it's not, I haven't even hit a stop loss yet. So technically it's fine. Because like I mentioned in the beginning of this training, right, we're still in that bear trap level where we could make even more. Anyways, let's get into the profit graph. So if I dive in, I want to make sure I pull up ES so I can look at all my ES positions. No, I need ES futures. ES, and we go into trade. And again, by default, it's on the table. Yeah, Don says I'm down 4,000 this week too, but I have 4 ratio spreads. Yeah, you're literally set. Anyways, that's a lot of downside protection, which is good. Anyways, I'll talk about that later, because I realized something that I wanted to talk about. So let me make note of that, is where in the graph you should worry about having different hedges, because that's important. But anyways, let's dive into the P&L curve, because that was a question here. So by default, you're on the table. You want to go to curve. You want to go to analysis. And while these two are expired, by default, it's going to show me all my positions. Obviously, these are all hedges. I have no 112s on for this contract. So you can see here, it's currently trading here. If we go down to this level, I'll make, wow, it looks like it goes up dramatically. I'll make, oh wow, I don't exactly know how this is showing. But it looks like because I have the ratio hedge. Yeah, so I can make somewhere from 1,000 to 20,000 or something like that in there for that range. But let's see more of a 112. I'm going to change this. I believe it's M4. Is that what I look at? Yes, M4. M4. Maybe that's expired. Let me just check out my positions here. ESZ4. Okay, ESZ4. ESZ4. Here we go. Let's go back to this. Okay, here we go. Now I can see all my Z4 positions. So you can see here what we're looking at. So I have my 112 positions on. So you can see here right now we're in this level where if the market continues to stay where it's at, is just float around where it is or go up, you can see here that'll make about $7,500. If the market continues to drop here, you could see this orange curve, which will show my actual loss. That is unrealized. So you can see here, I'll get down to around 11,000 or so. But as you saw before, I have those other hedges that will kick in. But if we do slowly downtrend and we get into this trap level starting at, so what is it, 5,500 again, which is where that main key level is that I discussed on the chart earlier, that 5,500 level, then we'll drop below that. And then you can see here, that's where I get a payout of 16,000. If we slowly downtrend into that, if not, then again, I'll hit my stops. And if not, it's fine. I'll just get into the next trade, which again, I'll have even better credit. But anyways, this is kind of what I'm seeing from the profit graph. But again, Don, let me know, is there a specific question you had about the profit graph? Because I want to make sure that I get that answered for you. And yes, I see these other questions from John and Vera. I'll make sure to get to them here in a second. I just want to make sure that I answer Don's question. Yes, but my screen format is not the same. Yeah, so again, what you're looking at, if you have your Tasty Trade pulled up, you want to make sure you're on trade curve analysis. And then again, what you might want to check is this config, where it typically starts you off at like the very closest range. You might want to zoom out all the way to 100 if you can. If not, then make sure you have this expiration clicked. You want to have P&L Theo and P&L expiration clicked. And then I think those are the only, oh, and info, because I like to see these levels here. So if all those are clicked, these should match. If not, let me know. But for now, I'm going to quickly jump to the other questions, but I'll be looking for your response. Okay. So John said, when a trade hits the profit mark, does the conversion to a hedge cost any additional money, or is that already paid for? Great question. Let me walk through this here. So that's already paid for. So again, a 1-1-2 trade has 1, 1, 2. And so what we have here is this whole trade as a whole. That's a terrible way to show as a whole. This trade as a whole, let's say we want to convert it into a put debit spread hedge, meaning that we're going to close this. So we let this whole trade get to a profit of, let's say, 80%. So that means that if this whole profit's at an 80%, that means these two puts have made money, right? Let's say we sold them at $10. Again, probably not. We probably sold them for way more, but $10, and now they're at 5 for easy math. That means that on these two puts alone, I'm making $5 a contract. There's two contracts. I'm making $10 or whatever multiple that is. So I've made $10 by closing this trade. And now I'm left with these 1-1s, which provide me that downside protection, aka that hedge. And the cost of this, by leaving just this on, well, let's say cost me $2. Okay, so that means my net profit is $8. So it costs me no additional money to put on the trade. It just takes some of the money that I've already made. So for instance, I could have had a larger profit by closing the entire position, because I could have kept the whole $10. But instead, I'm giving up some of the profit that I made to give me that downside protection, which, as we see, is very crucial, especially in markets like this. So you're not having to pay extra. You're just giving back some of the profit you just made, if that makes sense. That's how that kind of works. Oops, come back. Let's go back to ES. Okay. I hope that makes sense, John. Please let me know if it doesn't. John says, how do I manually create a hedge? And that's a great question. I keep going forgetting about the futures. So again, sorry, I'm illiterate in TradingView apparently. But what we want to do is, again, I gave you those two options before. You can, well, I mean, three. You can do a ratio hedge. You can do a put debit spread, or put debit spread, or you can do a just buy a put. Now, again, let's just say we're going to do a ratio one. So let's say you have these 1-1-2s trading and they're doing well. And you're like, okay, I have these 1-1-2s, but I feel like we're at a level in the market, aka an all-time high, where these trades could be at even more risk. And so I want to make sure I have more protection. Then you could create a ratio hedge that gets put on once a month. Okay. And so, for instance, if I go to create an auto trader, I can go on ratio spreads. I can do it on MES. This will cost me, I believe it's gonna be roughly $100, and it's going to give me about $2,000 of downside protection. We can double check this here. I believe that's what it is off the top of my head, but I haven't done it in a bit. So if we go to MES, cool, I'm already on that trade. Let's say we go 45 days out as a hedge level. I mean, you can pick whatever DTE you want. But again, the profit here that we're targeting is going to be roughly a 35 to 20. Let's just start here. Buy the 30 delta, and then let's say we're going to do some of the 10s or 7s, whatever, something like this. And then sell 2 of this. Okay, here we go. So now you can see here, this trade is costing me $91. So this trade costs $91 to put on. Okay, that's what I'm going to lose. You know, if if the market stays up, the buying power required for this trade is roughly 400. So I have to put up $400. If the market goes nowhere, I'll end up losing roughly $100 or 91. And if the market goes down it could go down up to a 25% drop, I'm going to make $1,400. So, if you're trading MES with a smaller account size, this is perfect because it's going to cover 5 112 losses basically. So this, if you put on this ratio hedge once a month, you're now covering literally 5 trading losses for the cost of 1 trade, if that makes sense, because one 112 trade on MES would make you about 100. Now, if you do the same thing on ES, it's going to be 10x. So you'll lose $1,000 if you're wrong, but you'll also get a roughly $13,000 of downside protection. So if you're scared of that and you want to put on a monthly ratio hedge, again, define based on your account size what you want. Again, these two, it can be whatever, but roughly 7 to 10 delta on the 2 that you're selling and roughly 30 to 25 on the one that you're buying. Again, you can play with those numbers, but like this is how you would structure that ratio hedge trade. And then you would put it on monthly. And again, you would cover a lot of downside protection, which is, why Don has 4 of them. So he's pretty set, but that's how you would do a ratio hedge in an automated way. Vera said, can we put on hedges through the auto trader based on how many naked contracts we have? That's something that I'm working on and will be in the software next week, is what I call dynamic hedging, hedging based on different criteria. So for instance, like I want to do 1 ratio hedge, and then once I have 1, I want to close all the positions, or I want to have on 1 ratio hedge and then convert the rest into PDSs, or for instance, be able to change based on how many naked contracts I have. And so dynamic hedging is coming, and so yeah, that should be there soon. Paul says, how does the auto trader manage the 112 if it falls into the trade trap portion of the trade? Does it take the profit at the higher amount or the original take profit? This is a great question, actually. Very well thought through. So let's dive into it. So if we're looking at this trade right here, I'm just going to mimic it based on what my 112s do right now. So I have a standard profit all the way up until I think the 5,500 level, which is about right here. Then my bear trap starts kicking in. Then I have a bear trap all the way down to I think it's like the 45 level. Yeah, 45. And then right here it starts turning into a loss. So again, we'll just do a sideways 112 to show you the profit graph in relation to the stock. Okay. So this is a normal 112, but in reflection on the stock chart. So if the stock stays here, I'm going to make my normal $1,000 profit right here. If it goes up, well, I'm going to make the $1,000 profit too. It's all the same. If we start slowly moving into this range, I'm going to typically make 3x this, so I'll make 3,000. And so this is where the question comes in. Now, again, if we could drop or whatever, then we get minus. Again, my stop will be around 4,000 actually. So my stop will be about here. Anyway, so it's a terrible drawing. But the question is, if we're in this bear trap and my max profit is 3,000, that's going to exceed what my take profit would be. So for instance, for most people, again, let's say just ES for easy numbers, $1,000 is my max profit. So if I have an 80% take profit percentage on this trade, that means it's going to close the trade once I hit an $800 profit. And so the question is, well, if it goes into this bear trap, I have the chance of making 3,000. So I do not want to close out the trade early for 800. I want to make the whole 3,000, which I believe is what Paul is asking. And so again, that's true. If we are in the bear trap, if we are in this zone, this bear trap between this level and this level, what we look at in the options auto trader is to ignore the take profit. Okay, so if we're in this zone, we keep looking at the stop loss because that's important. We need to always protect the downside. But if we're in this zone, we ignore the take profit percentage because we want to allow it to expire so that we can collect that whole profit. Again, this is what you would normally be doing if you're trading 112s by hand. You would keep your normal profit target in this range, and if you're in this range, you would just want it to expire. And so that's what we do. For the take profit, we ignore it so that we can let it expire and we collect the max profit. Now, again, our stop loss is still there so that in case the market drops and we hit our stop loss levels, that is protected. Does that make sense, Paul? I hope it does. I'll wait for your comment in the thing. But anyways, that is what it does. It does. So it does that automatically. Yes, it does that automatically. There's nothing you have to do for that. Again, the system, for the most part, outside of dynamic hedging right now, is pretty automated. It will do all that for you without you needing to do anything. Balls is awesome. Thank you. My pleasure. All right. Any other questions we have? I do realize that there was one thing that I wanted to cover that I haven't yet, so I want to make sure I get to that. But please put your questions in, whether about the options auto trader or anything else. Okay. This is something that I want to discuss because it is important, and I have covered it in previous videos, but I know that you guys don't watch all my videos because you're busy, which is completely fine. But I do want to make sure that I cover this because it's a very important point. If we look at the market overall, thank you for the Zoom call, much improvement. Of course, Don. If we're looking at this overall, our most risky or the riskiest levels are where the market starts to top out, right? The riskiest zones are in, oops, that's terrible. I don't want to draw a line. I want to draw this. Our riskiest zones are in this little area where it's close to the top, but not quite there. Close to the top, and this one actually hit it, but close to the top. These are the riskiest zones, all right? So I like thinking about risk as zones. And so what I mean by that is this: what zone are we in? And so I love looking at this indicator. I built it back in 2016. I've been using it ever since trading in 2016 because it shows me the overall levels in the market, but it also helps me identify risk. And so again, I can give you this indicator for free. It's no problem. But again, if we're in this zone between the blue line and this one, this is where risk is at its virtual lowest, right? The market has already dropped. Volatility is inflated. I can sell options and push out thousands of dollars below and be super safe. So in here, this is where you just want to be selling options, and hedges don't really matter, right? If you really want, you could do 1% of your trades as hedges, right? As we start to move into here, you want to kind of bump up that hedging percentage, right? So I could even say, like, again, this isn't a mathematical, this is based on your own risk tolerance. I just want to show you guys how to quantify it. But in this zone, you can have 50% of hedges on, right? Like, I'm going to put on 50% of my trades into hedges, and the others I'm just going to close. Versus these, you really want to, in this level above this gray line between here, this is the zone where you want to turn almost all your trades into hedges, and if not, turn them into ratio hedges. Why? Well, because this zone has the highest risk of crashing into this one and this one. This zone right here, there's not really much for it to crash. It can, but it won't be much further down because it's already crashed a very long time, or a very far distance down. So think of hedging based on risk in relation to the market. And so again, if we're in this zone like we are now, that's why Don said he converted 4 of his trades into ratio hedges. And that's why I said, hey guys, put a ratio hedge on, for something like this, so that if a market pulls back and even pulls back further, I'm going to make tens of thousands of dollars just from the hedge. And so that's why I want to stress these up markets are amazing. Every green day, awesome, awesome, awesome. Profits, profits, profits. But we are in our riskiest point in the market. And so with that being an all-time high, we're also, the likelihood of it crashing is also very high. So we want to turn most of our trades into hedges. And so again, think about hedging based on different levels of the market to identify what you should be doing. Because again, you don't need to be giving back that much profit for hedging down here if you don't want to, but up here, you definitely should be. All right, any other questions? Can you touch up on crash protection, and at what point does it trigger in respect to the current market conditions? So that is a question from Vera. He was asking about the market crash predictor. Great question. Market crash predictor triggers based on this indicator, which is basically a 2 to 3 standard deviation move. And so what we look at here is, let me remove all the drawings again. What we're looking at here is this: when the market gets above this range, this blue line gets above it, and then pulls back through it, this is a crash signal, okay? Or at least a pullback something signal, right? We can see that if we look over time. You can see here in 2018, broke above it. Then when we broke down, this is where it crashed. And so this was our crash signal. And so we identify that crash signal. That's when we get out of all our long positions. And that's when we let the market cool down for 21 days. Again, you can see the same thing here. We got close, but we didn't break it. So we wouldn't have gotten out of this, but that's okay because for the most part, we had a slow burn except for this one big day and things like that. Here's a great example. The 2020, we broke above it and then broke down. We wait 21 days. We let the market cool down, which means we would have started re-entering around here, and then we would have rode the trend back up, right? So again, we can see that, and this was a slow downtrend. It's fine. It hit here, down, hit here, down. 21-day reset was about here, and then now, again, I know it seems close, but none of these have closed above this blue line. So you can see here we got very close here, we got very close here, but no candles, no stock or no option, and I should say the S&P 500 never closed above this range. So we hit into it, but we never closed, and then it's pulled back. So that's why the market crash signal was not triggered for the trades. Now there was someone trading QQQ who got confused because they had it enabled, and that's because, well, yeah, it triggered here. You can see it broke above and then it crashed down. And they're like, oh, it exited my credit spreads, but it didn't hit my take profit yet. I was like, yeah, because, the crash protector. If you don't want it, you can disable it. It's fine. But the crash protector, as it is in there right now, does this. If it breaks above, it lets the market cool down for 21 days and then lets you re-enter. And so again, this is how I basically been doing this for the last 5, 6, 7 years now. And it just works well for me. Again, there are times when I'm out of the market for a bit, but it still works well. It keeps me from most of those losses. Kane says, at the moment, my plan connects to one account. If I switch between more than one account, does it break an open trade from the bot? Just to make sure. So again, in the options auto trader, you can connect as many broker accounts as you want, well, up to your limit. And each auto trader is connected to a certain account. So no, you can switch between different accounts and do whatever. It's fine. It's not going to cause an issue on the auto trader. But yeah, you can see here I was up to 19,700 around as my top, or 20,000 as my top, and then now I'm down here at $14,000 total profit. So yeah, definitely having some losses, but like I said, it's the slow burn, especially with those hedges. And now I'm going to be slowly coast my way in to the bear traps, which again, I'll get 3x my normal profit, which I would love. Could always do for a bonus, right? Paul says, how do you handle the ratio hedge take profit stop loss? So hedges are meant to be put on and let expire. It's like insurance. You don't cancel insurance. You just pay for that month and then you let it go through, right? And so all a hedge is insurance for that period. So if you put it on for 45 days, you want that insurance to stay good the entire time. So you're going to buy that insurance or sell that insurance or whatever, and then you're going to let it be good for that period of time. So yeah, that's kind of how you do that. Of course, has the same thing with the 112 hedges. Once we turn that trade into a hedge, then we just let that hedge expire because we want that protection to protect us for as long as possible. Again, you can see here with my hedges, it probably disappeared, which is sad. Yeah, I had a ratio hedge that expired today, which is sad, but it's okay. I still have all these hedges. So if you can see here, these hedges are giving me about $1,000 each, I think. 1,000. Yeah, so I have $5,000 of downside protection again because my ratio hedge got taken today, which is sad. But I'll be putting on the next trade that I get as a profit. I'll put on as a ratio hedge. But you can see here all the trades that weren't hedged turned into negatives. Again, this is the trade that entered yesterday because it collected a lot of credit. Is doing great. Remember, entering on red days is awesome. This was a chance where it entered on Tuesday before the crash. So it collected little credit and then had that volatility spike. But either way, these trades are still more than good for what I'm going for. So again, same thing happening on CL. Having that dip off the back end. All my hedges here have recently closed. $200, $400, $320 profit with the hedge included, so not bad. But now I'm in all these positions with no hedge, but it's fine because the next trade will be converted into a hedge. But anyways, any other questions? We've been on here for 42 minutes, which means it'll be ending soon. But I did want to make sure that I answer all your questions because I do know that we have a lot going on in the market and with the option with the option trader. So I want to make sure I answer all your questions regarding, again, the issue on the 16th. That will not happen again. I do apologize for that, but the protections have been put in place now. Ben Collins says, if we choose to enter only on red days, but only choose one day a week, will it check for red the whole week or skip to the next week of the day it is supposed to enter? Yeah, so the frequency still holds. So if you say to enter 1 day a week, then it will enter on the first red day of that week. So for instance, for this week, this is Friday, this is Thursday, Wednesday, Tuesday, Monday. So Monday, it would have looked at, okay, Monday once a week. I haven't placed a trade yet. Is this red? No. Okay, Tuesday, I haven't placed a trade yet. Is it red? No. Wednesday, I haven't placed a trade yet. Is it red? Yes. And so it would have entered on Wednesday and then ignored Thursday and Friday since it's only once a week. So yeah. Any other questions? But would we need to select all days of the week versus if we chose only Wednesday? Yeah, so like I mentioned before, the day of the week doesn't matter when you enable the red day only. And again, that's shown in your settings when you're either editing it or creating the auto trader. I put all those precautionary notes there. So if I go here, I can show you. Let's say we're just going to sell puts, just something basic. If we click here on enter on red day and we enable that, it says right here, enabling the red day setting will ignore specific entry days. It will ignore the days and only enter during red days, meaning the asset is trading below where it opened, but it still follows the trade frequency rule. So once a week, once a month, multiple times a week, any of that is what it does instead. So I hope that makes sense. But red day ignores the days because, again, we don't know what day will be red. Right, picking, say, I want to enter every red day on Wednesday. Well, we don't know how often that could happen. That could only be 1 or 2 trades a year. And I know you don't want that. So yeah, red days, it looks at the frequency, aka how often you want to put on, and not at the days, because we're already looking for red days. Okay, any other final questions, feature requests, market thoughts, anything before we go? Like I said, we'll probably see a slowdown on Monday. The markets start to hit this level and slowly start to see that reversal. Then we'll head back up. Then we'll immediately see volatility shrink, and all our trades will go straight back into green. If not, hopefully we have that slow burn down to this level, and then we all get 3 times what our normal profit would be. So if you're not hedging yet, this is your reminder: turn your 112 trades into hedges. It's literally almost cost-free because you're using the profit you made to have the hedge on. Anyways, any final questions? There says, how can we get the indicator that you're displaying? Yes, I told you I'd give that to you. If you go to my profile, scripts, I have a lot of different things going on here. CSTT, credit spreads, what I'm looking for is, isn't it this one? Yeah, it's this one. It's just the CSTT indicator. Yeah, 204 people are using it. So yeah, let me share this. I don't want to embed. I just want to share the link. Yeah, I told you I just give this indicator away for free, so a lot of people use it. But let me put it in the chat. Everyone in the meeting. All right, congrats. You guys should show up to more meetings. You get free indicators. Anyways, I will be here next Friday at 4 p.m. Central Standard Time. We'll do the same thing, talk about any updates in the software, and then also go over Q&A time, talk about the market, how to break it down and things like that. So thank you guys so much for being here. It means the world. If not, I would be here alone talking to myself and honestly probably Don, because Don always shows up. Thank you, Don. But anyways, thank you guys so much. I hope you guys have a great weekend. And again, if you need me, just email me. I'm only 1 email away. All right, see you guys.